Welcome to the Real San Francisco podcast, where the pulse of the city meets the truth of the market. We go beyond the headlines to bring you stories, data, and insider takes from those who live and breathe the city we love. Ready to get real? Here we go.
Welcome back to Real San Francisco, where today we're talking about the real state of the San Francisco market, what's actually happening on the ground. Sensational headlines are a thing, but the real vibe check, the real reality of what's happening on the ground through our perspective and working with dozens of families like yourself who are buying, selling, moving in and out of the city. So we're going to give it to you straight up to save you the time so you don't have to go through all of the Reddit threads and everything like that. Welcome back. And why don't we just dive right in to the headlines?
Let's do it. So we've got a few headlines here, and some past, some present, just to kind of give us a flavor of what people are getting as the idea of San Francisco, not the real San Francisco. SF Real Estate feels stuck in molasses. Listings dropped 17% amid price and interest rate stagnation. New listings in San Francisco dropped sharply compared to last year, contributing to a sluggish, sticky market.
Well, hold on. I got to interrupt there because the clickbaity headline would suggest that things are going the wrong way. But when inventory is down 17%, that suggests people want to stay and not sell.
Right.
So what do you make of that?
And that the absorption rate, that there's no inventory out there, things are getting absorbed quickly. And I think that inventory. I mean, that's what's driving the market right now. That's what's driving competition. And so I think that, stuck in molasses, I think it's just the opposite.
I mean, there's two things happening with this headline. One, inventory on the MLS is down 17%. Mm-hmm. Part of that is because people want to trade off market, which we should talk about.
Right.
That's why you need to be working with somebody who can get you into these off markets. I'd say half the deals that I've personally done this year have been off market, almost half, staggeringly high. So that's one comment. The other is, well, we're going to talk about it. People want to be here again.
Yep.
This is like a good city to be in.
Yep.
And we love the city, so we're biased. But we're going to talk about the numbers shortly. I mean, numbers don't lie. All right, what's the next headline?
Next headline. Buyers are spooked. Economic uncertainty and market volatility stall SF real estate activity. Many potential buyers are sitting tight, forced to back out amid stock market swings, high rates, and political uncertainty.
Not true.
Well, the political uncertainty, I think we've gotten past that. People know, we won't get into the politics here. People know what it is. I think we've moved past that. Buyers are spooked. I just don't see it. I mean, from the activity, especially now we're heading into the fall market and we're seeing this open houses are full. There's this energy in the air where people are coming back, and there's just, especially single family homes, there's no inventory.
This whole year has been like that. And it's not just now. I mean, look, the summer, we're coming off the summer shoulder seasons. It's always sluggish in the summer.
Right.
It's always sluggish sort of around Thanksgiving and winter also. So we're now upon the prime season in fall, and it's heating up fast, but it was hot all year. And I think that's just because we're on the comeback. We're the convergence of a couple things happening. One, we've got political will and new leadership in town, up and down, whether supervisors, mayor, things are on the upswing.
70+% approval rating for the new mayor.
Insane.
Speaks well for the city.
Insane.
Yeah.
So that's one element. The other is that you've got all this return to work. I mean, companies, not just the city just had 8,000 city employees of their 30,000 plus are now required to be back in the office. I mean, that's big for community culture, tax dollars, all that. But so too are companies, private companies following suit. And so there's a return to work, good for culture, good for community, but also good for people living in the city. More vibe. There's more people, there's more vibe, there's more of a thing here. And that's also driving prices, right? Yeah. And then I think the third thing is AI and all this industry that's just taking off and what was it, 5 million feet of space has been leased by AI in the last
29 billion in venture capital.
Last year or so. So we're just on the swing. And then I think the fourth thing is that people are actually looking at San Francisco as like, so all these things are happening. Then people are like, oh, this is cool again. Like there's a vibe.
Yeah.
Streets are being cleaned up. We'll get into the stats shortly. But it's like, we want to be back here. And so we're actually seeing people coming back from Marin, from the Peninsula, from the East Bay. Yeah. Usually they go the other way, right? It's just amazing. I would say of the clients I'm currently working with or have closed this year, I'd say probably 15, I would say probably like 3 or 4 families are coming back, having sold in San Francisco before, moved to the suburbs, and are like, we want to be back here.
Yeah. People, it's too hot elsewhere. Yeah. People thought it would be good in Austin or, you know, up north. And it's just, it's not San Francisco. And I think it said something about interest rates too. Interest rates being high and people are spooked about it. And I think that is affecting inventory. People are not wanting to get out of their 3% to jump into another house. But I think buyers now, it's being normalized. You know, that now it's 6-ish, 6.5%. People are saying, all right, that's where we are. That's where it's going to be. They're getting back into the market. I don't think that's a factor either. People are spooked by these higher interest rates anymore.
Yeah.
No, I don't think this.
What's the next headline?
All right, now we get into a couple better ones. Those were kind of the old perception, new perception. Luxury homes in San Francisco rising fastest. Lower tier prices flat. Luxury segment sees 4% annual gains while entry level stays stagnant. Okay, yes, we have seen that in the upper tier, upper market. But, I mean, those $1 million, $2 million homes flying off the shelves. I mean, what was in our sales meeting? There were 40 offers or something on that one?
Yeah, I mean it's multiple offers. I mean, first of all, like luxury segment, 5 million plus. I mean, you can't keep that on the market. I mean, it's selling. Look, if something's mispriced or if the floor plan is, you know, for the price is off or whatever, you know, location, sure. I mean, that might sit for a little bit of time. Right. But there is a lack of inventory and there are so many buyers who are just looking for the same thing.
Yeah.
And when they come, often, like I was saying, part of the 17%, you know, the Molasses headline, a lot of it's off market. A lot of it's off market. Like there's less inventory on market and less off market. And so you've got to make sure you've got access, not just to the MLS, but access to an agent who has access to the off markets. Right. And there's only a subset of us that are really operating there. Right. And so I think that's another part of the story that a lot of people don't talk about.
Yeah. People just optimizing for that and selling off market.
But to your point,
I think that there are a lot of sellers too that are still, there's low inventory. We want to get as much publicity and exposure as we can. Let's hit the market. Yeah. Let's go. And so we're still seeing those on market, multiple offers, you know, kind of the way it went 22 and previous when we hit the apex.
And still there's deals to be had, right? Because I mean, we're 47, 49 square miles, depending how you count, of our city. It's not that big, but there's so many pockets, right? Mm-hmm. And some pockets are just, we're at all-time highs. We're at peak pricing, right? Noe Valley, Cole Valley, parts of Pacific Heights and Presidio Heights, whatever. But then there's pockets that have come back from the lows, like south of Market, South Beach, right? Mission, Intermission.
And that the AI is definitely
But helped. AI is now starting to surge more and more, and I think we're going to see it pick up and ramp. Yeah. And so for people that are opportunistically looking, some things aren't flying off the shelf, but they will be in the coming years. And there's a huge opportunity to buy, hold, and sell for a lot more in the coming years.
Yeah, I think we've definitely missed the bottom of
not our clients. We've been talking about the bottom for years. And I think a lot of our savvy clients are listening and they got in.
Yeah, I mean, people have, if they're not in now, missed the bottom on most product. You know, I think everything now has been rising. You know, we used to talk about the difference between a single family home in Pac Heights and a high-rise condo in Soma, and how they're completely different markets, and one was failing miserably and the other was escalating exponentially. But I think now we're seeing multiple offers on some of those condos downtown. Yeah. I mean, everything's coming back. Yeah. And the whole market is rising. But I think to your point, there are still those pockets and deals to be had out there. How long those last?
Yeah.
We shall see. Yeah. I don't think long. Last one. Local home buyers staying. SF defies urban flight narrative. Local listing views shift back to SF from 68.9% to 62.9%, staying, aided by livability improvements and AI jobs. I think more of what we were just saying.
Yeah.
You know, the exodus has become the return.
That's right.
People are coming back. People want to be here. Now the headlines are AI, San Francisco, influx of money, influx of people, and therefore the housing market.
Yeah. Yeah.
Let's get into some stats.
Let's do it.
All right. Couple just key highlight stats we pulled. Prices, average median price, highest since 22 peak. It's about a $2 million average median price versus 1.8 in 22. 2 million was in 22, 1.8 now. So we're headed back up, and that's steadily been rising. 5.2% appreciation year over year.
Which, by the way, I have to pause. I mean, in 2022, the peak pricing, median pricing, that's when interest rates were less than half of what they are right now. Yep. And the fact that we're within 10% of peak pricing when purchase power has gone down more than 20%, that's amazing. Yeah. I mean, if you normalize, 3 years, I think it's fair to say that if interest rates were the same today as they were then, we would be way above. We'd be at peaks right now, or above peak.
Yeah. So. And that in 22, that was just jumping, like always, the last sales, the next comp, but they were just jumping so significantly. Yeah. And I think we needed that correction that came, but it is pretty amazing in 3 years that we've come back around. 5.2% appreciation year over year, highest in the Bay Area. Mm-hmm. I think we were talking about some of our sister areas and cities. In Marin, it's 0.6% year over year.
And you saw a lot of them appreciate, whether it's Marin, East Bay, Peninsula, et cetera, you saw huge appreciation during pandemic times, right? Because there's a flight from the city to the burbs.
Right.
People were working remotely. But now people are coming back. Well, they want to be here. And so suddenly the appreciation's in our favor, in the city's favor now, at the detriment of our sister and brother locations across the Bay Area. It's a cycle. It's a pendulum. The pendulum has clearly started swinging, and I think it's even more so towards the city.
And less inventory. We are smaller, like you said, 47 square miles. Yeah. And so a lot of those are bigger areas with more inventory. And so we have limited inventory, so it's just going to keep going up. July 25, 986 active versus 1,099 in 24 and 1,135 in 23. So that just speaks to our inventory. That was number of active listings in San Francisco in those years. And so it's been steadily declining, unfortunately.
Fortunately for buyers, fortunately for sellers.
Right.
Because there are more buyers now than there were in 2023.
Yep.
And there's less inventory. It's like the perfect storm for prices to increase. And that's why we're seeing prices go up.
Absolutely. 5 million plus home sales, up 19% year over year.
There it is, the luxury price point.
Just no inventory and just people fighting tooth and nail for those homes just because there's nothing out there.
A number of our clients have been those winners. I mean, I think about something off market on Broderick in Pacific Heights, Cow Hollow. We rep the buyer. There were 3 offers, went, right around the ask price, which was several $100,000 higher than what it sold for a couple years ago.
Yep.
And I think that our clients now have already $200,000 of equity in their home because the market's gone up several percent since they purchased it.
Right. And then in Noe, some of the wins in Noe, those multiple offer situations where we angle to get them in. And it's for buyers, it can be, unless you have working with the right people and have the right angles into those situations, it can be tough. There are people lining up for those houses.
Yeah.
70% overbidding in the latest month, 11% over on average, 27 days on market.
Those are big numbers. 70%. This must be, is this single family home or is this a cross condo?
That was a cross.
Wow. 70% above. Now, part of this is a bit of a little misleading because this is from the latest list price, and oftentimes people will reduce pricing and because something's not selling, and then they'll reduce it so much to try to drive activity, and then it'll go above.
Right.
So that's part of the lurking variable. But the point is these stats are pointing towards a direction of people want to buy, people want to, prices are appreciating, and things aren't staying on the market very long.
Right. And I think it's worth mentioning here too that it's tough listing overall San Francisco statistics. because like I said before, we have so many micro markets and it's such a nuanced market that it's hard to say, here are the average stats overall.
Yeah, and I think this is a good time to say, if you are looking to buy or sell in a specific neighborhood or neighborhoods, reach out, because these stats, to what you said, are overall, overarching stats. It's important to understand what's going on in the micro, nuanced in the neighborhood or neighborhoods of your interest. And so we're happy to break that down. We have all those stats internally. We'll go through it with you.
Yeah, because we've seen, I mean, I think in the last, so cyclically, we're going into the fall market, which spring market, fall market are both kind of the biggest markets in the San Francisco cyclical year. And in the spring market, we were seeing Noe homes, single family homes, some going over 1,800 a square foot. And so some of these neighborhoods, you can look at Noe, look at Pack Heights at 1,800, 2,000 a square foot. But then you go to some other neighborhoods that are not as desirable, and they're could be sub 1,000 a square foot, and not these multiple offers.
Especially
so
condos.
Very much, yeah.
Hard to find single family homes under 1,000.
It is.
But possible sometimes.
Sometimes, depending where you go.
Yeah.
And what state they're in.
Yes. Yeah. All right. This was from August 4th of this year. Quote, San Francisco has had its share of tech companies since the dot-com boom, but the money pouring into artificial intelligence has lately supercharged the city's tech profile. Last year, San Francisco companies raised nearly $35 billion in venture capital funding. The change is visible. Rents are climbing again. Sidebar, rents are the highest I've ever seen in San Francisco.
Yeah, there was a stat that one bedroom rentals are up 15%. And I think that's low compared to what we've been seeing.
They are up almost 20% year over year. It's really something. Okay. I'm going to go back. The change is visible. City buses are filling back up, and the face of San Francisco is starting to look younger. The city is the tech industry's hub for artificial intelligence. And this is in an article called What If San Francisco is the New Silicon Valley? This is from the New York Times.
Yeah. This month.
Yeah. I think the world is catching on. I think for a while we were the laughing stock of the country. Especially there's a lot of partisan politics around that.
Yep.
And even internationally, when Daniel, when my brother was running for mayor, one of his common refrains was, I travel if I'm abroad or whatever, and people say, "Oh, you're from San Francisco. Are you okay?
Yeah.
Are you safe?"
And just people traveling. All of our friends. You talk to them, and they went here and there, and it's horrible. It's
right. Now, I haven't been abroad since he took office, but I'm going abroad for a wedding soon. I'm actually really curious if I come across some locals there, what they say about San Francisco. I wouldn't be surprised because New York Times is reporting on this. Right. I think global media is reporting on this. Right.
Yeah, it's exciting. I think we're seeing the headlines, and I think that it is the old doom and gloom, doom loop, crime, homelessness, all these things that people used to just say, "Oh, San Francisco's so horrible, and you can't walk out your door anymore."
Yes.
I think that is all changing now. That perception is changing, and it's a great thing. It is, property values are reflecting that. The market is reflecting that. And I think we're just going to see it keep accelerating.
Yes.
So we talked about the market. Now let's get specific. If you're buying or selling, or if you're just standing on the sidelines and thinking about buying or selling, let's talk about what we need to know, kind of the most important things that buyers, sellers, and watchers, sideliners need to know about the market. So let's start with sellers.
Sellers. What sellers really need to think about right now is a few things. One, what is the value of their property now, and what could it be if they do some strategic edits? Right. And when I talk about strategic edits, of course, we're talking about what kind of prep work are they doing? What kind of investment are they making into the home to generate the highest return on investment? Think about it as a business, right? So much of what we're doing is we're talking about staging, painting, maybe some finishes, new light fixtures, the bathroom tile, just spraying that, making it look brand new, the landscaping, cleaning things up. And so some strategic market prep can increase the value by 10%. They might only put in 2% to generate an extra 8%, right? They get a 5x return on that investment.
Yeah.
Right. And so that's,
in small things too. I forget exactly what the statistic was, but putting in a Nest thermostat causes buyers to perceive a home as 20% more valuable.
there's a whole psychological element
things,
here. And so these are the types of things that we're going to do for our clients, for our sellers, right? So what is value now? What could the value be with strategic edits? How fast can we do that? Timing the sale is ideal, right? Because there's two primary seasons, right? Of course, there's the spring market and there's a fall market. We're right upon the fall market. And typically to prep a home, it depends how much work needs to be done, but we could have a home prepared within 21 days and ready to show, or it might take a couple months, right? We've been on both sides of the pendulum. We've done things for 3 or 4 months sometimes. We've done things in a couple of weeks. Yeah. So reach out early. Reach out early. The first step is reach out early. We'll advise on the value. We'll advise on what we do. We'll advise on timing. And part of the timing might be that we introduce it off market first. We curry some interest. We perhaps sell it at a high price or a price that makes sense. So there's little carrying costs off market. How great is it to be able to potentially not have the home vacant for 3 months before you sell? And so you're not paying all those carrying costs like property taxes, insurance. When a home is vacant, there's more risk also. And
and some sellers prefer to do that to not have the exposure. They don't want all the traffic through their home. They want the privacy. They want to do it off market. And so I think those are all considerations when you're.
But what I'd say, because there's such a lack of inventory right now, it's like this is the perfect time to sell certain assets, especially single family homes, especially condos in highly desirable areas, even TICs. So reach out and let's chat about the submarket. Let's talk about your specific neighborhood and what buyers are looking for. And all the time, I get dozens of calls a week. Hey, I've got a buyer looking for this and that. So I'd say would you add anything on the seller side? Or
I think one other important thing for sellers to look at is pricing. How do you price? Because we see homes that are overpriced, that sit on the market for 60, 90 days.
Absolutely.
And then if they're priced right, which is typically, the SF pricing strategy of price low, bring in lots of eyeballs, multiple offers, bid it up.
Competition drives price.
Right. And so I think that is an important factor with what is the product, because pricing strategies are specific to a product. So what is the product? What is the pricing strategy? And that changes. We see that fluctuate month to month, season to season of those pricing strategies and what you use.
I think that's right on the nose. You hit on the head there. So let's talk about buyers. Let's talk about buyers. If you're a buyer starting off, where do you even start right now, Baxter?
It's a good question. And I think, again, it's because the nuance of this market, what are we looking for? What is your price point? Because if you're looking for a condo around $1 million downtown, or you're looking for a $3 million single family home in Noe that's got 4 bedrooms and a backyard, they're different strategies. Mm-hmm. And so I think, where does everybody start? You get your financing in place. You get approved.
Make sure you know what you can afford.
Yeah. And we always suggest getting fully approved. You get pre-approved at least to start, so you know where you stand, you know what your budget is. Then let's discuss the product and what you're looking for.
Yeah. I would even say the first step is you figure out your real estate partner, right? Because that real estate partner is going to know who to introduce you to on the financing side. I agree.
No, you're right.
Because the financing partner that is selected should sort of be predicated on the asset that you're looking to acquire, right? Like if you're looking at buying a $1 million condo, like you might be in a conforming loan category, not jumbo.
Right.
But if you're looking at 2 or 3 million, and if it's single family versus a TIC, that's going to be a different product altogether. There's like 4 or 5 banks that will land on TICs. Right. Every bank will do single family. Every bank will do condos, but maybe it's a co-op. And then there's only a couple banks like Bank of San Francisco that will loan on co-ops. And so So I think we start with the real estate partner side of it.
And even there, again, with the nuance of the market, lender to lender, even officer to officer, people that know the San Francisco market, that are local, have done deals here, because we've seen those stories. And we advise that if you're using a lender that's not based here and is not used to a 17 to 21 day close, I mean, all of those things.
That's a good point. And I think that's where a competent real estate partner, be it us, be it somebody else, they're going to know. Look at them as almost like the general manager of the team. They're going to go ahead and recruit all the players and introduce you to them for you to interview, make sure you like them. And then, sort of build that team around you, that advisory team around you. And so the lender is like that first piece, like you said, that is the first piece. Mm-hmm. But entrusting those introductions to your real estate partner is invaluable, right? Not only for who can perform in this market, especially when 1 out of 3 offers is cash. And if you're financed, you want to compete against cash as best as possible. You need the best possible lending partner, but also the most competitive rates. We were saying earlier in the episode, rates can be 6.5, 7. We've seen it helps clients secure close to 5% with relationship pricing, right? And so we know who's offering that, how you can get that. If you have $1 million relationship, you can do a lot. If you have 3 million, if you have 5, you have 10. But maybe you don't have a relationship, but there's still not all lenders are equal.
Right.
That's for sure. Right. Okay, so
next
realtor
step.
Partner financing. Then it's about how do you have access to the inventory, right?
Define your product, decide what you're looking for.
Right.
We always suggest cast a wider net up front, because you want to make sure you're not missing anything. Some people say, I want this exact thing, and this is all I want, and they miss those possibilities that, later on they say, wow, I should have looked at that.
Yeah.
So I think cast that wider net, decide what you want or what you think you want.
And it's looking not just on market, but it's the coming soons, it's the off markets.
Then you get into inventory.
Like I've mentioned, half of the clients I've supported this year are off market. For you, it's got to be double digit too. I mean, you got to be 20+%. I mean, there's a huge market there, but there's only a handful of us sort of doing that, right? And so access to inventory, I think, is really, really important. But you got to have your financing ready. You got to have. You need to know all that going into it, because if you find that perfect home and then you can't transact, you can't do anything, I mean, it's really a miss.
And that's where you get a lot of people, especially first-time buyers, to come in and they say, well, I'll do that when I find something I like. I'm not going to get my, have them run my credit or fill out all the paperwork. I'm not going to go through all of that until I find something I really like.
Yeah.
And that's where we need to explain, well, you're going to miss it then.
Yeah.
Because if you don't have it, this market is so fast that if you don't have all your ducks in a row, it's going to pass you by. You can't scramble once you find something when the offer date's next week to get your financing.
Yeah, that's exactly right. I mean, you can, but it's painful and you often end up losing out, right?
Yes.
And it's
our gray hairs show the.
Yeah, I know. It's happening. Diligence. I find that construction quality over the years has just declined. I think more than ever, diligence and finding really good diligence partners. And it starts with the real estate team that you select, because they're going to help introduce you to very capable inspectors, contractors, vendors who will help you assess and size up the good, the bad, and the ugly of the property you're looking at seriously buying. And more often than not, especially if it's competitive, you're doing that diligence in advance of the offer date. And if you know about the market, that home just a few days before it hits market, that extra couple days is invaluable. So we try to do that for our clients, get them in early, and then they've got a week, maybe 10 days to do a lot of diligence before that offer date. And so it's about lining those people up quickly who are the best in the business to really help the buyer understand what they're buying, so that not only do they make sure that it's a good product, but they can anticipate their costs of ownership. Is the roof going to have to be replaced? And if so, when? What kind of seismic upgrades, if any, are they going to do? If they think they want to add air conditioning or do landscaping, what's that cost look like? We want to help our clients understand not just the cost of acquisition, but what's the cost of upkeep? What's the cost of renovation? And these are really important factors when they're thinking about their budget.
Right. And I think to take a step back too, for reference in this, for people coming into the San Francisco market, outside of San Francisco, we do things in reverse of most markets, where a lot of markets you go in and you don't know anything about the home, you submit your offer, then you do your diligence, then you get your credits and repairs and all of that. We, because it's such a competitive market, we get all of our information in a disclosure package up front. And so the diligence is even more, we need to do such extreme diligence and be in the know of all of the paperwork and everything that's in front of us, all the documentation in those disclosure packages, because that determines our contingencies. And it's not going into contract and then doing the diligence. It's making sure you know everything up front, everything. And with the homes, a lot of these older Victorian, beautiful homes in San Francisco, they're older homes. And so you need to know exactly what's going on with the roof, with the foundation, with the old electrical, all of these things that we need to look very closely at so you know what you're getting into on the other side.
So in summary, select your realtor partner. 2, make sure you have a great financing partner. Your realtor partner will help you with that. And get underwritten up front, not just pre-approved, underwritten. 3, access to inventory, not just on market, but make sure you have access to the off market and get early access. 4, diligencing the property so you really know what you're buying so you can be confident about making that offer. And then 5, making that offer and making sure you negotiate properly. Look, the winning offer typically is overpaying everybody else. You don't want to be that person that's overpaying by 10%. And so often when we're listing properties, we see people who are agents who are representing buyers. I mean, they will counsel their buyers to overpay by like 5, 6, 7, 10%. Oh my goodness. Like when you're talking about $3 million asset property and they're overpaying by 10%, that's $300,000 over the next highest offer. Ideally, you don't want to be that person, right? And so that's where understanding value, consulting on value is something that we do for our clients, making sure that, helping ensure that you're getting it, but not for 300 over, but more like 15K, 20K, 30K over. Often people are overpaying by about 1%, but 5%, hopefully not that, right?
Yeah.
So,
and I think so, and that's kind of a look at always what you need to do as a buyer. And then I think to touch quickly on current market, what a buyer needs to look at in current market, I think that's just, you need to, and this is always too, you need to act quickly. I think things are moving. We're in the slow of the summer market, but things are speeding up into the fall market. And I think you need to get your ducks in a row.
Yep.
You need to know that things are going to be competitive and probably getting more competitive going into this market.
Yep.
And so, and if you're waiting on the sidelines, I think things are just, things are going to be getting more and more expensive.
That's right. And so this notion of, well, I'll wait and things will stabilize. It's like, well, actually, we're coming back from the bottom. And so momentum and what we're seeing would dictate that it is highly, if there was a poly market bet on this, I would say that it is like a 95% that we're going to see prices increase, not decrease. And so what side do you want to be on?
Right. And I think rates will come, rates are stabilized, but they're going to come down.
Yeah.
And if people are acting while rates are the way they are now, then as they come down, it's going to accelerate even more. So all of the forces behind it.
Date the rate, marry the home. You can always refinance.
Right.
But to find the home that you love, when you find that, that's when you strike. That's really important.
Right.
And also, don't let good be the enemy of great, right? In other words, if you find a good home that you're going to be really happy in for 3 or 4 years, and you know this is not a 10-year or forever home, that might be perfect for this next chapter. And then you can find your great home for that next chapter afterwards. Yeah. And too often I see this analysis paralysis with certain buyers, and it's really to their disadvantage, right? I think. And the hard line that we walk as real estate agents and really advisors is knowing, sort of walking that line where we want to be respectful and support the decision-making of our clients because it's their home and their life. But we see people fall in those same patterns. Mm-hmm. And it is interesting. It can be a little tricky, I know, for buyers.
Yeah.
Yeah.
That was our market update. So I think we should wrap it up by just high level buyers, sellers, watchers. What are the most important things they should be paying attention to? So buyers, what would you say?
Buyers, I mean, partner with that real estate agent that, you're confident is going to be able to protect and advocate for your interests, and then build that whole team around and the strategy on how you're going to find that home, pay as little as possible, diligence it really well, and be really happy.
Wait.
Yeah, don't wait. Don't wait on the sidelines.
Don't wait.
Okay.
Sellers, I'd say price right, prep right.
Strategic
Make
prepping.
it look good, price it right.
Yeah.
Single family homes, you go condos, they're selling too.
And you're not alone.
Right.
This is where you lean on your real estate partner to help you. Or really guide you. That is our job, to provide that guidance. I think so often sellers are overwhelmed, understandably.
Yeah.
Oh my gosh, what do I do? Where do I start? Who do I hire?
Yeah.
Well, we can help with that. Yeah.
Watchers, stop watching.
If you know you want to buy in the next couple of years, this is a good opportunity to get in.
Because I was just talking to someone yesterday about, we started the conversation 2 years ago. And because life has been as such, and it always will be, they now are seriously getting into the market. And it was, I should have
10% less a couple years ago.
And so that's what, people are seeing as they wait. You just see the price go. And we understand life happens as such. And sometimes it's just not possible. But if you have the means, if you're going to buy, I'd say do it sooner than later.
That's exactly right. Thanks for joining us today. That's it for the Real San Francisco update. You may have questions. Reach out. Baxter and I would love to sit down, have a call with you, and just be a resource. Whether you're thinking about buying or selling, or just have questions about the market, we're here for you.
I want to talk about San Francisco.
Yeah, we love the city. It's great. So in the meantime, stay informed, stay in the loop, and stay real, San Francisco.